Hello everyone, welcome to my YouTube channel. This is Nirav, and in this session I'll be doing Elliott Wave analysis of Nifty. So as you can see on screen, I have the daily chart of Nifty, and currently we are looking at the data from somewhere around 2009. And as you can see, we have the first completing over there, the second over there, and the third is in progression. Within the third, we have completed the first, the second, the third, the fourth, and we are in the fifth. So we are basically in the fifth of the third, and within this fifth we have completed, okay, let's see. So within this fifth we have completed the first, the second, and we are currently progressing in the third. So double bracketed third of fifth of third, and within this third it looks like we have completed the first. Unbracketed first has been completed, so we would be progressing in the unbracketed second of the third of the fifth of the third. Yeah, I know it might sound confusing, but if you have the chart and you have the labels on yourself, you can look at that. What I basically mean to see is the starting point is second, means a correction is possibly coming, but the trend is basically up because we are in the third, and the third we are in the fifth, and the fifth we are in the third. So 2 3s you can see over here. So basically we are in quite a good looking uptrend, and we should be waiting for a correction. And let's look at that in a closer detail rather than having a theoretical discussion. Okay, so I have done some changes in the counts of this first leg of impulse here, but not that it matters, it's already done. Looked at it via different trend lines and all that, using support and resistance, and I think this is a more fitting count. But then again, it's done and dusted, and it doesn't really matter much, at least of now. So what I really think is that there might be another case in which this circled fifth might not have completed over here, and then we might look at a little bit of correction over here, and then a wave going up and then completing the fifth. That is alternate possibility at this point, because overall if you see in this wave structure, the first is the longest, and the second and the third and the fourth and the fifth becomes the shortest, which is a possible count. I mean, no rules are being broken here and all that, but I do think that fifth can have a leg up. Not that it matters. I would like to point out here that you should, or everyone or anyone doing Elliott wave analysis should note that having the right count is not always necessary for trading, as I have always found in my trades, that even if you have a rough idea of where the market is going, basically if you have an idea of the trend and you have a good idea of which wave progression you might be in. For instance, at this point we know that we might have either completed the fifth, or we might have a fifth leg after a bit of correction. So that much idea is good enough to formulate a trading strategy and implement it for making trading decisions in any particular instrument. Let me show to you that how. So for instance, if we consider that the fifth is complete over here, then we will wait for a correction, and after that we will be looking to buy either at this point, this turning point, I mean at the pullback, or we will buy at the breakout of this high. Okay, so basically we will implement two kind of strategies if the fifth is complete over here. But on the other hand, if the fifth is not complete and we see, for instance, a small pullback followed by the fifth leg up, then again we can still buy on this breakout, and we can add more to our positions on this pullback. Basic underlying fact over here is that we do know that the entire trend is up, and since the trend is up, we will only look to buy on pullbacks or breakouts and try not to sell. At least if you are more of a swing kind of trader, then try not to go short in this kind of situations. Obviously, if you are intraday kind of trader and have done out your homework completely before the start of the session, then you can obviously look for short positions on intraday basis. But basically, if the trend is up, then all we look to do is buy on pullbacks or buy on breakouts. So at this point that much is clear, and based on that we can formulate both kinds of strategies. Also, I like to point out we can have a small pullback over here, which might signify that the fifth was not over here and that we might be progressing as 1, 2, 3, 4, 5 or the fifth over there. So these are all basic hints that you can take from the market as it progresses. And if we look at say what the fib levels and all that, then the complete fib retracement for this is coming at this level. 50-60 retracement is coming around this 84-30 and 8300 levels. So this is the maximum kind of retracement that I think we might have. And obviously if the retracement is a little bit shorter, it can be a little bit shorter. It's not like it has to go to 50-60. There is no such rule. It's just in general observation. So it can go up till like 38 also and then go up, and it might as well be less than that. But our general observation tends us to, or makes us believe that it generally goes to that much level. However, as I already mentioned, the strategy would be to buy on dips. And if you are more of into equity, like if say instance you are going long on Nifty via Nifty Bees, which is an exchange trading fund, Nifty Bees, that is you can buy 1/10 of a share of Nifty by investing in this ETF. Then you would be looking to buy on these dips, that is buy over here, over here, over here, and then add to more of your positions when this breakout happens. Okay, so this would be the basic strategy that should be implemented in this kind of market, and that was basically all I wanted to discuss. I think the entire picture is already clear to you, and I also have a complete video on a detailed analysis of this complete picture from the monthly chart down to the hourly or daily chart. And for that video I will put the link in the description so you can check out the detailed analysis if you wish to. But as of now, for the upcoming weeks or say what months, our strategy would be to buy on dips and buy on breakouts. And that was all basically I wanted to discuss in this video. And if you like it, definitely hit the thumbs up button, definitely share it so I get more views and more motivation to make such videos. And that was all I wanted to discuss. Thank you.